This is Chico here. It's April 17th, Thursday, the last day of trading for this week. Tomorrow, the markets are closed for a Good Friday, Easter weekend. And so what we got? Well, yesterday, the markets dove because of Jerome Powell's comment about potentially being in a challenging situation with the economy due to the tariffs that the Trump administration has launched. And so today, surprisingly, the market is just moving sideways a little bit. And in headlines, or you can read about it, Trump is basically angry at Jerome Powell and really wants to terminate this guy. So I'm sure he's working on it. Other news, United Health Group, interestingly, is tanking this morning because they missed earnings, and I guess projections are also not that good. They have to reduce projections. So yeah, not big interest to us, but I thought I'd just share that. Here's an article how the results are disappointing and acceptable, and the CEO saying they need to do better. But another news that's interesting to me is TSMC. So they reported earnings today, and they met their earnings forecasts. They profits top estimates, and so far they're holding their outlook. But of course, this TSMC is on fire because of artificial intelligence, and they're just printing the AI chips like there's no tomorrow off their lines. But of course, they're expressing uncertainty due to the trade wars and tariffs. The only other thing I gleaned from a few articles that I read is that the smartphone business, the chips for smartphones, it's a little bit soft, but AI has picked up the slack for that. So with that said, here's one article also for housing in America. It says America's largest home builder warns of things slowing down, at least getting off to a slow start in this spring due to the economic conditions and people having uncertainty about like the outlook themselves. Okay, let's move to stocks that we are interested in or that we're working on. First is Tesla. Tesla is down yesterday, and let me see if I can load the 5-day chart. It's not loading. So it's at 239. Yesterday, we opened a position on them. We sold a call option contract with a strike price of, let me bring it over here. Yeah, $252 and half a cent. We sold this near the end of the day, and we sold it at 98 cents. This contract expires today. So right now it's just like plummeting because we're nowhere close to the strike price. It's at 7.5 cents. So that's very good for us. We'll be able to definitely make a profit off this, all 98 cents, I think. We'll let it go into expiration. So yeah, that's all I have for today. I don't think we're going to do anything else. If we had more money in the account, every month we start off with 40K. Maybe I would make a play on Netflix, or if I wanted to be more aggressive, I would close out this contract with Tesla, and I would maybe sell another call contract because the implied volatility is relatively high. Here actually it's gone down now, 245. Yeah, okay, maybe I wouldn't. If a 245 contract was maybe a little bit higher than what it is right now, which is 38 cents, then maybe I would consider selling that. Maybe it was like 60, 70 cents. And I guess the stock price has gone down a little bit since I last looked at it before shooting this video. Like maybe 241 would be good. Anyways, yeah, so yeah, that'd be if you want to afford taking more risk. But here I'm trying to get good returns for the amount of risk, and I'm not going to make that play. I'm just going to let our Tesla play ride into the sunset. Hopefully if everything stays on course, even if it goes up, it stays below $252 50 cents, then we're good. We're gonna pocket all that premium that we sold for 98 cents, which we only sold one contract, so that's $98. Okay, that's it for today. So don't forget to like and subscribe if you haven't, and I'll catch you next episode.